Hello and welcome to CIA News Analysis. Tomorrow's crypto news today. Well, thank you everybody for your patience, as over the last month I have moved my family to a new location. I'm sure you can tell by the background that we're in a new spot. But more importantly, we were able to publish the long-awaited Cryptonomics report. Now, if you haven't taken a second to check out this report, it is an absolute must read. You may understand what the central bankings are doing with the traditional inflationary system. You may even understand the implications of blockchain, artificial intelligence, and the Internet of Things in the long run when combined with the law, what kind of control system it's going to be. But I'm sure you have not heard of the coded cryptonomics of Bitcoin. This report shows how the bankers are using Bitcoin and cryptocurrency to take advantage of their same investing strategies that they use cyclically in the traditional market system. Furthermore, it brings to light the fact that this deflationary digital system solves the three biggest problems within the inflationary debt-based system that we now use. Not problems for users like us, but problems for the controllers and the bankers. It solves fungibility or privacy. Basically, it's the declared victory on the war on cash. It solves centralized trust. Nobody trusts the banks since 1913, which is why the FDIC insurance even exists, to reestablish trust in the American banking system. And thirdly, it eliminates free market fluctuations such as inflation, flips it upside down on its head, and uses inflation and the free market economics to empower holders and users of the currency. In other words, to increase purchasing power over time so that the holders of the currency are able to buy more goods and services, unlike now in the inflationary system where savers are penalized and you can buy less goods and services over time. So please go ahead and check out the Cryptonomics report and get up to speed with this new replacement digital control system. We are at the bottom of the cycle that we detail here in the Cryptonomics report. And of course, at the end of the report, we include all of the data and all of the charts and citations that you need to confirm our research and to empower yourself with the knowledge that we've organized for you here in this report. Okay, well, moving on to our first story, we see that first U.S. pension funds take the plunge on crypto investing. In the story, it says that Morgan Creek Digital has scored what it says is probably the first investment in the crypto asset universe from a U.S. pension fund. Two pension plans in Fairfax County, Virginia, are anchor investors in a new $40 million venture capital fund, according to a statement from the company. Other investors include an insurance company, a university endowment, and a private foundation, said Morgan Creek Digital founder Anthony Pompliano, who declined to provide further details. Many institutional investors, which crypto enthusiasts believe will be drawn to digital assets because of their volatility and potential outsized gains, have been deterred by market manipulation and a lack of regulation. Of course, we know through the news analysis that we've been doing that states like Wyoming and Ohio and Arizona and even Delaware are moving forward at a fast pace to litigate and to establish laws and regulations that allow cryptocurrency to blossom here in the United States. The article says the Virginia Pension Fund joins a handful of institutions to invest in the crypto world, including Yale University, the second largest endowment in higher education that invested in a digital assets fund last year. Now, this is important news because we're in a bear market, and the best investors are always at a contrarian mindset to the mainstream. When the mainstreamers are saying the sky is the limit, the good investors are taking their profits. When the mainstreamers are saying the world is over, I've lost everything, the good investors are coming in and buying up the real property and buying up that undervalued asset class. And now we see this here at the bottom of the bear market, which also correlates with our research in the cryptonomics cycle of Bitcoin, that we are now in a 9-month period where there's time for Bitcoin to set a new low. However, the lows are coming in, and there's no saying that below 3,000 is an absolute guarantee. It's a possibility. We could go all the way until December and see Bitcoin recapitulate down to 1,500, but once it hits that bottom, it bounces up and it doesn't look back as the OTC markets start to price in the inflation rate adjustment that we're going to see at approximately May 24th, 2020. All right, well, in our next article, we see that JPMorgan Chase moves to be the first big U.S. bank with its own cryptocurrency. In 2017, Jamie Dimon, JPMorgan Chase chief executive, declared Bitcoin a fraud and said that any employee caught trading it would be fired for being stupid. Well, on Thursday, JPMorgan became the first major United States bank to introduce its own digital token for real-world use, the latest step in Wall Street's evolving approach to the blockchain technology that underpins cryptocurrencies like Bitcoin and Ether. Despite questioning Bitcoin's legitimacy, Mr. Dimon said he recognizes blockchain's potential in the future of global financial system, and JPMorgan has already released a blockchain platform, Quorum, which several institutions are using to keep track of financial data. With the announcement of its coin, JPMorgan is widening its experiment and moving to make the idea of digital currencies more palatable to its typically risk-averse corporate customers. Well, it looks like Jamie Dimon should listen to himself and fire himself for being stupid, because there is a difference between blockchain and Bitcoin, and we just seen in the article that they're already applying blockchain for data analytics. However, when it comes to currency and cryptocurrency, creating your own coin to compete with Bitcoin, to me, is just a show, and he should be fired. Mr. Dimon should be fired for being stupid and not understanding the full market. But what's funny in this case scenario is I've learned something through my move. You know, your parents tell you, don't do as I do, do as I say. And when it comes to the banks, they're saying the same thing. Don't do as I do, do as I say. Well, when it comes to your parents, they love you, and you should probably listen to what they say, even if you don't really agree with it. And even if you see them doing something different, they love you and they want what's best for you. Well, the banks, they don't love you. They want to exploit you and your wealth. And when it comes to the banks, they're saying, don't do what we do, do what we say. Well, we should do the opposite. We should ignore what they say, and we should start doing what they're doing, which is getting heavily involved in blockchain. We are now at the point where like we just mentioned, there's a short window of time for the bottom to be found in this market, and things are going to turn around very quickly. And if the historical data proves true and this cycle comes to fruition, we're not going to be able to see Bitcoin at these prices for the rest of our lifetime after we go through a whole nother cycle. So we have to ignore what the banks are saying, watch what they're doing, and making sure, just like top hedge fund managers in the world are now saying, anywhere from 1% to 4% of your overall asset base should be allocated into cryptocurrencies. We should be doing what they're doing, which is preparing for this technological shift, preparing for the future of a cashless society and for digital currency backed by blockchain, artificial intelligence, and eventually the Internet of Things. On to our next article, we'll see that from a survey, half of millennial investors trust crypto exchanges more than stock exchanges. We see here nearly half of millennial traders have more trust in digital currency exchanges than in U.S. stock market exchanges. Data regarding millennial investment attitudes was collected in a new study from investment platform eToro, published on February 19th. Per the report, 43% of the surveyed millennial online traders demonstrate less trust in the traditional stock market, while having more faith in cryptocurrency exchanges. 93% of millennial cryptocurrency traders reportedly said that they would invest more in digital currency if traditional financial institutions propose such an option. At the same time, 71% of millennials that do not trade cryptocurrency said that they would begin if it were offered by conventional institutions. Down here we see that 45% of the respondents expressed interest in allocating cryptocurrency in their 401k retirement savings plan, and 74% of digital currency traders would like to receive that option from their 401k providers. Well, if you are a full CIA member, you know that we recommend a self-directed 401k. You don't want the banks controlling your retirement savings, your hard-earned money, your tax-deferred money, and then investing it in mutual funds, which are overpriced and overvalued and at the top of their cycle. You want to be able to take ownership of what you worked hard for over your lifetime, and you want to be able to allocate that wealth into different asset classes to protect your wealth as we move into this transfer from the traditional system to the digital system. And another thing I pick up here is that 71% of millennials that do not trade cryptocurrency said that they would begin if it were offered by conventional institutions. This seems to go against the title of the actual publication, which is that the millennial investors trust crypto exchanges more than stocks. Why would 71% of millennials that do not trade cryptocurrency, the people that we're trying to empower and trying to show that you can have freedom from the debt-based system in the short term, as this system emerges, great wealth is going to be created, and it can be freedom of finance and an escape from the debt-based system. But in the long term, we need to be warned, we need to be aware that this isn't always going to be the case, and that this system can eventually be used against us when it's combined with the law. But that 71% of those people who aren't trading cryptocurrency said that they would begin if it were offered by conventional institutions. Well, those people should begin by listening to this, and they should not be trusting traditional banks and stock market exchanges, whether they offer it or not. The whole point of crypto is that you eliminate the middleman. So we don't want to be dependent on a stock exchange or a brokerage for us to attain our crypto, even though we will in the short term. We want to make sure that we're not listening to what the banks and the exchanges are saying and how we should go about our business, but we should watch what they do and mimic what they do as they prepare from the transfer of an old dying system to a new thriving digital ecosystem. And in our next article, we see that Elon Musk, Bitcoin has quite brilliant structure, paper money is going away. The reason I wanted to take time to read this article is because there's a lot of big names in here. And it's one thing when these big names come out at the top of a bull market and they're saying, oh, Bitcoin this, Bitcoin that. They're just getting the attention off of the hot topic. But now we're in a bear market and Bitcoin isn't that popular, and it's hard to convince people that, hey, Bitcoin, people are telling you it's good, but in reality, it's a control system. And hey, in the short term, it's going to empower you. It's going to be an escape from the debt-based system. It's going to be a beneficiary of the transfer of wealth. But in the long term, when it's combined with the law, this system can be used against us. So beware, beware. So are any of these voices saying that now that we're here in a bear market? Let's take a look at this article. Technology entrepreneur and Tesla CEO Elon Musk said Bitcoin structure is quite brilliant and that digital currency is a far better way to transfer value than pieces of paper. He also said that cryptocurrency bypasses currency controls. Paper money is going away, and crypto is far better way to transfer value than pieces of paper. That's for sure. Some other famous names that have weighed in here, we see that previously major industry players also argued that Bitcoin occupies a unique place as a store of value or digital gold. Keep in mind that the original Bitcoin that existed was a digital peer-to-peer currency, and you can read that in the white paper. What has happened after the Bitcoin Cash hard fork, the Bilderberg Group and these new age programmers have actually forked Bitcoin and taken control of it and changed what it was supposed to be. They want to make it what Novogratz says, which is a place of store of value. It's a digital gold versus a peer-to-peer currency. So we see that Novogratz, a former Goldman Sachs partner and founder of crypto merchant bank Galaxy Digital, said that Bitcoin is going to be digital gold, a place where you have sovereign money. It's not US money, it's not Chinese money, it's sovereign. Sovereignty costs a lot. It should. And as we discussed in previous episodes, Bitcoin does not rely on any economy. Bitcoin does not rely on any state. Bitcoin is its own worldwide economy and its own worldwide network. It is dependent upon nobody except those who maintain the network. And unfortunately, we're at the point in time where the people who maintain the network have successfully forked Bitcoin and have turned it into a digital gold, which we'll see here in a second. The reason that they're doing that is because eventually when assets are digitized, or when assets, real world assets like a bar of gold or a house, are turned into a token, and you can easily purchase that real world asset with a digital coin such as Bitcoin, it'll be much easier for the wealthy and for the elites to come in and take that real world property. What we see now in the traditional markets is that the markets go up, they take their profits, they place their shorts, the markets go down, they take their profits. Then when everybody's hurting, they take advantage of the people, they take advantage of the timing in the cycle, and they come in and they buy up all these real world assets, the short sales, the foreclosures. They take advantage of people who are in debt and need to sell their goods in order to service that debt because they don't want to go bankrupt. And they take advantage of people that way. But there's a lot of costs associated when you transfer that wealth into different assets. Think about how much it costs to buy a house or how much it costs to transfer gold and silver back and forth. There's costs that are associated with attaining these assets. But when it's all digitized, when it's all in a digital ledger, when that bar of gold is a digital token, or when your house is just a digital token with a deed attached to it, it's much easier for the elites to come in with their purchasing power and then take that asset from you in a simple digital exchange versus having to go through real world realtors, real world contracts where there's a middleman taking a piece of that pie. They want to eliminate the middleman and accrue assets throughout each part of the cycle, taking advantage of the people who don't understand the cycle or understand how to manage their assets. That's what we see here with Bitcoin being taken over by those spiritual programmers who think AI is God. And if you'd like to see that citation, you can see it in the Cryptonomics report. Finally, we see that Twitter co-founder and CEO Jack Dorsey, who is well known for his conviction that Bitcoin will become the native currency of the internet, said earlier this month that Bitcoin feels it's the one that wants to be a currency the most. See, now he's going back into currency. So Mike Novogratz is saying, hey, this is a store of value, it's digital gold. And Jack Dorsey's come out saying, hey, this could be the native currency of the internet. He said Bitcoin feels it's the one that wants to be currency the most versus others that are doing more general purpose things or distributed computing. I think, talking about the altcoin space, has generated some really amazing ideas, but I'm focused on currency and the transactional aspect. Again, just wanted to read this article so that you could see what some of these big names, big CEOs are saying about Bitcoin in the bear market when not that many people are going to be paying attention to what they're saying. So it's a little bit easier for them to come out and establish their view. Whereas in a bull market, it could be construed as you trying to take advantage of the hot topic or of the movement. So we see these big CEOs coming out, and we're going to see that in the following article as well. We see here that IBM Exec lets slip big partnership announcement with Stellar. Now, I know that everybody has been eager for more of our daily videos to come out, and I appreciate everybody's patience. So here's another little golden nugget for you. An IBM blockchain executive has let slip details about the company's new cross-border payment solution, WorldWire, and its growing relationship with the Stellar blockchain. Stellar, XLM, Stellar, Golden Nugget. Jesse Lund, IBM's VP for Blockchain Solution, has hinted that the international tech company is set to announce a new product which could allow payments from anywhere in the world to anywhere in the world. It's supposed to be as simple as sending an email. In an interview with Fred Spivista's Daily Exchange at the IBM Think 2019 conference earlier this week, the blockchain chief played coy with the details, suggesting that the full announcement would come in a few weeks. I'll be keynoting a major event in Singapore with my friend, the Stellar founder, Jed McCaleb, he said. We'll be talking about a special announcement about the product and what it includes. We can see here that we hope to have within 3 to 5 years hundreds of endpoints, hundreds of operators providing access, enabling us to have global coverage, the ability to send money from any place in the world to any other place in the world. Well, if you've been following us here on CIA News, you know that IBM is all over blockchain, artificial intelligence, and the Internet of Things. IBM will most likely be one of the most successful, richest companies in the world in the next 10 to 15 years, and most certainly in the next 20 years, as this technocratic shift from old dying systems that you cannot trust to the new trustless systems that they're bringing in that are fair without bias depending on what your position or party or power. And that is going to lead to companies like IBM who are involved in building these products to be huge beneficiaries for what's coming next. Finally, in our last article, a group of 30 global central securities depositors is exploring crypto custody. We see that a group of central securities depositors in Europe and Asia is taking a serious look at how they might collaborate on infrastructure to custody digital assets. Still very much in the exploratory phase, aka just now learning that their whole business model will become worthless in a few years. They are now scrambling out of panic to find a way how to survive. Most likely what will happen is that the CEOs, the CFOs, all the higher ups of these companies will probably get jobs for crypto companies or crypto exchanges or crypto depositories, because that's the big thing now. We got laws, regulations, and custody. Those are the main three focus right now in the crypto market. And there may be a place for some of these businesses, but what they're starting to realize is that they're going to need to change their business plan if they want to survive the emergence of this digital asset class. And we see that the CSDs are planning to present the findings of their working groups at the annual CBOS conference in London in October. But these organizations, which have been guarding stock certificates for decades, clearly see an opportunity to apply their knowledge and skills to the crypto space, where losing your private keys means losing your keys forever. Here's the quote: "A new world of tokenized assets," this is what we were just talking about, that gold bar being tokenized as a digital token and represented a real world item, a real world tangible asset represented by a digital token, a proof of ownership, you could say, that these new world of tokenized assets and blockchain is coming. It will probably disrupt our role as CSDs. No, it will disrupt your role as CSDs. Hence why you're in panic mode, exploring how you can change your business model to keep up with the transition from the old system to the new system. The whole group decided we will be focusing on tokenized assets, not just blockchain, but on real digital assets. And the article goes on to some technicals. But what we really want to pull together from this is that in a bear market, you see 30 global central security depositors now coming to terms with the reality that this is happening, that digital currency is an emerging asset class, and that Bitcoin is going to be here no matter what. We see Jamie Dimon caving in on it. We see other big leagues like Elon Musk, Jack Dorsey, Mike Novogratz caving in and saying, this is what it is, this is where we're going, and they're making these statements in a bear market. So when time comes, they can look back and say, hey, this is what I've been saying, this is what's happening, this is where we're going. And like we said in this video, we don't want to be the people, don't do as I do, do as I say. Well, listen, when it comes to the banks, when it comes to the mainstream headlines, we don't want to be doing what they say. We want to do the opposite. We want to do what they do. Ignore what they say and do what they do. And that's what we're going to do here at CIA News Analysis. So thank you for joining us, and I look forward to making some more videos, picking apart these headlines so that we can not listen to what they have to say, but start doing and getting prepared for the new digital control system of the technocratic future economy. Thanks for joining us, and we'll see you next time.